Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. As you can see, dashboard's a little bit empty this morning. Sjord's going through reworking some tools for us. As I've sort of said before, once we get to the point where I'm actually doing the daily brief right off of this dashboard, then TRI is fully up and operational for our upcoming cycle. And as it stands right now, we're still working through building out our screeners and our different screening tools that Sjord has built. So proud of Sjord. Guy has worked so hard. And just some absolutely beautiful work he's done. So super excited about this on the TRI site. So just an FYI, why is this looking a little bit empty? Because we're developing through the developer cycle. We did have a holiday yesterday. It was a Martin Luther King holiday, so my apologies. Didn't do a free video for you guys over on YouTube yesterday. But what we did do was like an hour and a half, I think, long daily brief, and basically talked about everything under the sun. So it was just an in-house video, and actually today was a good hour, 10 hour, 15-minute conversation with the gang. And like I said, I like to cover everything under the sun. So we basically covered the whole kit and caboodle. So for your guys' conversation, we'll probably just limit it to this matrix here. It covers everything that I really want to talk to you guys about and sort of puts everything in summary. US dollar index, sort of the main driver of risk on, risk off in this hegemony world that we live in. Excuse me, right now. Oh, holy hiccups, Batman. Sitting flirting with 38.2s. We talked recently about how we had a bunch of rejection through these wicks at 38.2's previous highs. You can see they brought the market right back up top to this level. And here we are battling at this important trend line. Of course, United States of America is going to be completely immersed in impeachment conversations now for probably, my hunch is probably the next week or so. And to a certain degree, I do like the idea of risk maybe being driven into a very big options expiry event on Friday. And now that that has done, what I noticed is we have a whole bunch of quote-unquote reasons why markets are going to come down now, whether it be analysts saying prices are too high, whether it be, oh, well, war isn't likely to happen in the Middle East, whether it be, oh, we've got a new virus that's running around Asia. And interestingly enough, like the last major influenza crisis, the total death toll of the crisis I thought was interesting was only hundreds of people. So, yes, it makes for a lot of news headlines, but, long-term economic impacts, I don't think it makes that big of a difference. And, I mean, it's the middle of winter, everybody. It's January. This is when people are supposed to get sick. That's actually just business as usual. Having said that, it's a pretty nasty virus, and the irony of it all is we actually spend a bunch of time today reviewing names that we might consider playing these viral outbreaks. And this is a whole part of the market. I haven't seen this in years, but I remember years gone by, we used to have a lot of fun trading these stocks through this kind of environment. And you can see some of these stocks like doubled overnight. And interesting, like this one here, this ImmuCell, it actually came down to where it was basically almost a shooting star. Now it's ratcheted back up here. Look at this bad boy, Ultimmune, just rocking and rolling here this morning. And actually interesting to that effect, or to that end, we had one site member today. I sort of put the challenge out on the site last night, knowing what was coming, and oh my goodness, flu, influenza, blah, blah, blah. I just put a challenge out on the site. We probably should pull up a list of all these companies that are in the vaccine business or related sort of biotech field, because I think this part of the market is hot right now. Daniel, one of our site members, this is an excellent testament to why TRI is so powerful, is that we work together as a group. And Daniel was like, yeah, I did a little bit of scanning, looking for stocks with relatively good share structure, and at the bottom end of the range and in this particular field. And he put together a nice little list for us to go shopping with this morning. And I happened to see this one, which really jumped out at me. I mean, this is, everybody who watches my videos should look at this and go, well, rinse and repeat. What a coincidence. Beamish is in there trying to buy W's, and I picked up a little bit of this one here at, what was it, 219, Kevin? 218, something like that. Just literally, as we were going through the daily brief, I was like, I got to go grab some of this. I mean, this is ridiculous. Beautiful small risk window. If it blows through these lows, I'll just walk away with just the ridiculous upside potential. So, needless to say, I'm long. And I'm loving this junior market right now, stock-wise. It's just a lot of fun. So I've got this huge shopping list now of names, and I mean, you just go through the list, and I mean, oh my God, there's a W, and oh my God, there's a W coming in. I mean, it's just, oh my God, love TRI community. Thank you so much, guys. You're awesome. And actually, it was kind of interesting. We kind of jumped ahead here a little bit. But here's another stock. Like I said, I'm loving this junior market in the stock market. This is a stock that I picked up through this consolidation here. And, whoa, nice little treat there. And again, what do you think? Is there any upside potential for this stock? So, I think I've told you guys before, 2020, we check in on January barometer. This crazy January barometer. It looks like we're finally stalling out here a little bit. It's about bloody time. But January barometer here is saying, get ready, man. This month, this year is an up year. Holy holies. I do believe that there was a bunch of options and derivative shenanigans that went on through that Friday session. And if anything, like ebb and flow, we should see a little bit of back and forth. I would have thought normally they probably would have brought the market down, but because of that options expiry, massive open interest in certain contract strikes, which I think was just too much of the big one percenters. They obviously had some sort of agenda. So you can actually see the stock market stopping out a little bit here. I think I've told you guys before, I have been thinking about going and strapping on my insurance policy back in the stock market again. This is starting to look really, really tempting. I think I also told you guys, too, that I was really interested in shorting the gold market, which is a bit contrary, right? I mean, technically, because one's risk on, one's risk off. So maybe we should take a minute and just look at that. Where are we here? Is it risk on, risk off? It's around here somewhere. One of these pictures, not like the other. There it is. Stocks, okay, looking a little heavy. Oil looking a little heavy. BTC now looking a little heavy. Yen, oh boy, I think yen just carved out an upside key reversal. No, not key reversal, beg your pardon. Empire. And actually, if we look at that chart, there it is there. So I'm thinking yen wants to move up here. Bonds, one good thing is, looks like it's below the trend line. It's below 38.2. But, you son of a gun, you're looking up a year. And then, of course, like I said, we got impeachment stuff. So is that going to sort of take the wind out of the stock market? I think to a certain degree. It's interesting to see the play in the gold market right now. Today's price action is just turning into a big fat doji. And I've talked about gold yen before. If yen is putting in this inverted empire and is expecting to rally, maybe now is when we can get that rally in the gold up into red boxes here to short. One thing I will say is, like I said, I've been watching the gold stocks really closely, and I commented on Friday that I was really interested in watching Newmont here, and noticed Friday was that big red bar. They actually gapped her lower this morning, which pissed me off to no end. There was a counter trend rally that came right back up into that trend line resistance 78.6s, but this isn't enough for me to have a trade. Remember, if anything, I've got like an empire top potentially forming, and my sell signal comes in on a loss of today's low there, which is 43.09. So still keeping a real close eye on this gold market. Now I noticed also too the gold stocks themselves come up to a very interesting apex here. And really, one might argue that maybe we might even get like a fractal bottom here. If we can accept, if we finish the day here and then can accept above that high, tomorrow, well, no, that's not really true. We'd have to actually have a quiet day tomorrow and then move up through that high the following day for it to actually be a fractal. If anything, if you're a bull, what you'd really like to see is this gold index work its way right up here and close just above this doji bar high here. If that's the case, that becomes an outside upside key reversal. Super bullish signal. So I don't have anything to act on Newmont. I was watching this really closely, and I really didn't like the way they gapped the market lower this morning. In essence, this is now a range. Below of the range is your sell signal. Break of that top of the range, bust that fractal top, and my hunch is we're probably heading higher. So still watching Newmont here really closely. And like I said, interesting to see that sort of risk on, risk off conversation about the gold there. What else, damn gold chart? Big fat doji so far today. Now, if we sort of melt down here and stocks hold on to their lows and start turning back up, then I could very easily see this turn into like a bear flag. Interestingly enough, of course, if we turn back up, because this is a doji bar, if we finish the day like this and we turn back up through this high, that's probably like a midpoint consolidation move, which, like I said, takes us up into these reload zone tops. You know, if we put the head and shoulders little image, right? And we just saw that on Bitcoin, right? Exact same thing. So I could easily see this gold market get up into this reload zone. The interesting thing is the gold stocks, if this is trend continuation, will work our way higher. My hunch is the gold stocks are probably going to work their way higher too. So we'll see how that goes. You know, I haven't decided to do anything there yet at all. As I said there just a moment ago, loving the penny junior market. Very pleased with just simply buying W's. 50% levels long way away. Rinse and repeat. Just keep on keeping on. Heading on over to crypto, I'm a little worried that maybe Bitcoin is, we did have that CME options event. We did have this inverted head and shoulders. Remember, I just showed you that on the gold chart. Exact same thing, but this thing has hit its head and shoulders objective. I think I've said recently, if you did take this long, don't let a winning trade turn into a losing trade. You might want to just abandon this long, because this to me looks like a diamond pattern. And I think I have that on this chart. This is kind of what I was talking about a couple days ago on the broiler chicken show. This is an empire here. I beg your pardon. This is a expanding wedge, a megaphone. Get all my damn terminology straight. I lost the megaphone icon. Damn it. Anyway, megaphone icons in here somewhere. I can never remember where these icons are though. And actually, looks like they got rid of a bunch of icons. That would suck if they got rid of my megaphone. Anyway, oh, there it is. Yay! If I was able to find it. So it looks something along these lines. Move over, Brandon. Jerk. Always making money. There is that megaphone. Da, da, da. So we could very easily see price work its way along this trend line here. We could also see price work its way up here as well. Moving average sandwich. 200 SMA on the upside, 13 EMA on the downside. You can see that's got the market's attention. We really should expect reload short zones, things like, hour, day traders. We should expect resistance up in this wick, and same sort of thing with the tail. We should expect some support, so it kind of makes sense why we haven't crapped out here. There are people still covering their positions. If we do diamond out here, right, then actually, again, midpoint consolidation. But at best, I like Brian and his crazy bot trade setup. What I would prefer is we do something along those lines, give us a nice big fat W to work with, and bot our way higher here. So it's still a little too early for me to get too excited one way or the other. I still think this consolidation is playing itself out. And I think we talked to you on the weekend about RSI studies, M's in RSIs, especially if it's the first M, after a series of W's. In essence, this basically says, bull, you may still be in control. We're above the 50 line. Second W through the 50 line is the bull is taken over. But, the trap, latecomers, people that weekends, they either politely got told to exit or unfortunately they might have gotten stopped out. That often happens. But bulls, new money coming in, better cool your jets until this thing either W's and we work our way higher or M's out and we might actually even have to work our way lower here. And also, too, you can see I've drawn where reload zones are. If I was going to take a shot here off of this range, I actually like the idea of the market coming down and playing with the POC here. You can see below value. I think I don't know whether I did it on the public one or not, but a guy I absolutely love trading futures, John Hoagland. He's a big volume profile guy. He would be buying down below value here. So that would just, in essence, be buying against the test of these lows. The only problem I have with crypto right now, and it's sort of a bigger picture problem, I still think there's one more FU out there. Call me crazy. Everybody does, so you wouldn't be alone. But this GBTC, I put out a tweet sort of to this effect earlier today. I don't like what I'm seeing here at all. And if we look at things like momentum studies, we're actually getting M's coming in on things like RSI. Like we said off of that other chart, M's themselves are not a good sign. GBTC's actually got a bit of a divergence working here as well. We got a bit of a divergence in OBV. That's not good. One thing also, too, that jumped out at me, and I put out a tweet of this effect earlier. Notice how the market rising 200 period moving average last cycle top. Real fight at it, tried to accept above it, lost it, and we had to work our way lower. And then notice, here we are, same sort of thing. Fight at 200 SMA, lost it, trying to recover, then rolling over. Uh-oh. This looks a little dangerous here, guys. So I'm not overly excited, and I think, in my tweet somebody had made reference to this. It's funny how I just mentioned Mr. Hoagland. Mr. Hoagland absolutely hates when people buy at the POC. He wants to buy below value or he wants to sell above value, but he hates buying at the POC. So we're sitting right at the POC. This is a horrible trade location. So, call it what you will. The interesting thing is those long setups off the bottom, they did work. So you can't say that this didn't work. The question is, are you going to try and, hold on to this for higher objectives? Tough one. I wouldn't fault you if you did. The only advice, and really remember, we don't give advice. I'm just sort of telling you what I'm doing with my money. I'm not doing a trade right now. And the only thing I would just simply say to people is, whatever you do, just don't let a winning trade turn into a losing trade, because that psychologically is very difficult to handle. Okay, I think I'm going to leave the daily brief recap at that. I sure talked a heck of a lot here today. The only other thing I'll leave off with is I really, really like the broader crypto market right now. Here's just yet another example, just beautiful bottom that came in on this Cardano. Kavarkanator here, Kevin, the Duke of Albuquerque, in exile now in the state of California, though. Couple things I'll mention here about this. Number one, be careful about doing any of these Cardano US dollar calculated by TradingView. Because this tail here, I originally looked at this and I went, wow, what an awesome fill that would have been. But if you actually go and look at like ADA on like say Kraken or something where you would have actually been able to do the trade versus USD, you notice that tail didn't even happen. So be careful with reading too much about these calculated by TradingView charts. They're not real price action. But what I will say is, just look at this chart. It's ridiculous. This is just the high from last summer. If I go in and I just try and buy that W, and I don't know whether you can work stink bids anywhere down in here, and I do things like just simple things like I want to see a 50% retracement of this range. And actually, didn't I say I was going to stop talking a few minutes ago? Silly Brian. There's a 50% level all the way up there. I mean, hell, even if you just bought the market now and risked against those lows, which I don't think is a good idea, but even if you did, that's still under 2 to 1. Certainly not acceptable. But what I like right now is the idea of RLZing these kind of ideas. I don't think it's a good idea to go and chase that there. But what do you think the odds are that this original double bottom probably lines up nicely with reload zones? So this is what the basic message I'm sort of suggesting to people is if we do get a pullback in crypto, keep hunting those setups. Because I think actually there's a really cool buying window that's developing here. So something along like that. Oh, actually, gotta go like that. Like that. I'm terrible at this. Sorry, guys. Even if you just go something like that, and like that, and like that. Look at these numbers. They get ridiculous. 5.7 risk reward. Jesus H. Christ. And what was really cool is the level 2ers in our education program right now are working on horizontal support and resistance. And you can actually see horizontal support and resistance lining up in that area. So get your bids working. I think it's a really interesting market. I had sort of suggested to the public recently that as long as these things are still pointing up, this is the poop perp and the bull poop and the moon poop indexes, then I think we can look for higher prices. But notice, and it's kind of hard to see because of the percentages of all these things, but notice they're kind of stalling out here a bit, eh? So can you see that? So I think we can actually start using these indexes here to start sort of, framing expectations. When these things are Wing, get ready. We're ready to rock and roll. When they're kind of distributing like this, maybe cool your jets. And like I said, get your shopping list ready, get your levels ready. And my hunch is when this thing W's out and these kind of names are sitting in reload zones, ready to go. Okay, I think we'll leave the presentation at that for today. Hope you guys enjoyed the offering. Never a dull moment in this market. All the best, and bye for now.